LiberalViewer presents.
So, welcome to the March 13th edition of LiberalViewer Monday Media Mixup. Thanks for joining me. Give me a thumbs up and subscribe to the channel if you like what I'm doing. This week I'll be showing you the 12 best, most newsworthy clips from the Sunday morning news analysis shows from the big five corporate outlets of ABC, NBC, CBS, CNN, and Fox News, the so-called corporate media here in the United States, which will be really informative, educational, fair use media criticism, and political commentary show for you all today. You can see from the video title, the topic is, Who's Afraid of Silicon Valley Bank? Because there was some fear over the weekend of a bank run, like a bank failure. And I'll talk more about what bank failures are and why Silicon Valley Bank failed when I get to the news summaries and some of the newsmaker clips. By the way, down in the video description, you can see short summaries of all 12 of my clips if you want to see what's upcoming. And for my political comedy, well, you know, all the big five corporate outlets covered the failure of Silicon Valley Bank on the Sunday shows, except Fox News Sunday. And I'm not exactly sure why they never mentioned Silicon Valley Bank on Fox News Sunday, but one theory I have is they hadn't figured out what the Fox News spin was going to be, and they kind of figured that out, I guess, by this morning. I'll show you that on the Faulkner Focus, that's not really one of their straight news programs. They had former Trump economist going back many years for Republican Steve Moore on, and I think they found their spin for why Silicon Valley Bank failed. It's because it was a woke bank. It was a woke bank, and that's why it failed. And so that is one of two political comedy clips I'm going to show. This is from this morning on the Faulkner Focus on Fox News that I'll talk about a little more after we watch together over here.
Wow. Reports that Silicon Valley Bank gave out company-wide bonuses just hours before it collapsed and had some backwards priorities even before the failure. Here's a quote. While Silicon Valley Bank collapsed, top executive pushed woke programs, the exec in question, ahead of risk management. The irony is real here. Business founders and lawmakers alike are going after the bank. Let's watch real quick.
I feel bad for all these people that lost all their money in this woke bank. Who knows whether the Justice Department would go after them. They're a woke company, so I guess not. And they'll probably get away with it.
We see now coming out that they were one of the most woke banks in their quest for the ESG type policy and investing. This could be a trend, and there are consequences for bad Democrat policy.
So wait a minute, Steve. Let me paint the picture here. Grab your keys, grab your files. By the way, you get a check, you get a check, you get a check, and we're going to talk woke out the door. I mean, that's crazy town.
You better believe it. And you're exactly right that about $5 billion of investor and depositors' money went into these green energy programs that have no return. We know that these ESG funds over the last couple of years have severely underperformed the markets. And why is this important in a broader context? You're probably following this story, Harris, but Biden now wants to basically require a lot of banks and investment companies to do ESG investing and divest in oil companies. By the way, last year, Harris, the top returning stocks were the energy companies, and Biden wants these funds to divest in them. So I think that there's no question that this woke investing had a very negative effect on the bottom line of SVB. And it's, by the way, it's also outrageous. They're talking about bonuses a couple of months before they declare basically bankruptcy.
Do you think they knew?
Well, this happened awfully quickly. I don't want to get to their motives, but that money should be given back because, and one other quick point. Biden said this isn't going to cost taxpayers anything. That's ridiculous. Who's going to pay for the bailouts? Of course it's going to come from you and me. Who else would it come from? What's that?
He says fees and other ways, but I mean, you're talking up to $250,000 per account if people are running small businesses, have that money parked there. I don't know what kind of fees they're charging, but I am curious to know how we aren't on the hook for this. Your last quick thought.
Yeah, I mean, we always know that these bailouts of the banks and bailouts of companies come right out of the pockets of taxpayers, and it's really unfair, especially when you're talking about now investing, ensuring the deposits of people or millionaires and billionaires. I mean, that's not fair to the average taxpayer.
Wow. Well, we'll see if he keeps his promise on that, President Biden. Good to see you. Steve, thank you always.
So, of course, depositors are paid back up to $250,000 insured by FDIC insurance fees. Those are account fees that the banks and account holders pay, depending on who the bank gives the fee to. But that isn't paid by taxpayers, and there's enough money in that fund to pay off all the depositors, although that's one of the thing where Steve Moore there says that it's the woke policies that were responsible for the downfall of Silicon Valley Bank. That is totally not true. I mean, there are two big things. One is the rise in interest rates when Silicon Valley Bank put like a huge amount of money in government bonds that had their value went way down as interest rates went from, basically 0 to like 5% very quickly. And so they had to like sell some of those at a loss. And then they had all these depositors with way more than $250,000 in the bank. People like Peter Thiel, who was like anti-woke, anything but woke. There was like $43 billion withdrawn from that bank just over the weekend. That's like the biggest bank run in history almost. And so, they didn't have that much money on hand, and that's why the bank failed. It had nothing to do with woke policies. And in the clip after next, I'm actually going to show you a Republican candidate for president, Vivek Ramaswamy, who was over on CNN State of the Union, and he's like wrote a book being, anti-woke capitalism, and even he admits that it was not wokeness that caused the failure of Silicon Valley Bank. And I'm not even sure what woke means. I hear it all the time on Fox News, and of course from like Governor Ron DeSantis in Florida, as like Florida is the state where woke goes to die, but nobody ever really defines it. I'm actually going to show you in the clip after next where Vivek Ramaswamy does try to define it a little bit, but he defines it in a way, and then he like totally strawmans it right after the definition. But before I get to that, my second political comedy clip is from Brian Kilmeade's One Nation program over the weekend, where he and former Trump press secretary Kayleigh McEnany and this guy Tyrus, who's like a Fox News commentator, I don't know where they got him, they all are like bemoaning the fact that despite the like now years of time that Fox News has put in on like making woke be a label for evil, like a majority of Americans actually think woke is a compliment. I'm still not sure what it means, but then they deride the poll itself. I see Fox News use poll numbers all the time when it's like bad poll numbers for Biden or whether he should run again. Then polls are very accurate, but apparently polls aren't accurate when people still like the word woke. Over in my second political comedy clip over here.
USA Today did a poll, and I was shocked by this. They asked the people what you thought of woke, the term woke. Believe it or not, 56% have a positive view of the word woke. 39% said it's an insult. Over half of Republicans have a negative view. Kayleigh, how do you view the term woke? I hate it.
I hate it. I will say, look, I'm a Floridian, so I get calls from pollsters all the time. I hang up on them. I've got to believe, like, the normal people who don't like woke just click, click, click every time that pollster calls, because, I mean, the polls are designed to shape public opinion now, not to gauge it, and that's what we saw with this.
What about you?
Whenever someone has introduced themselves as woke, it always puts a smile on my face, because I know the conversation's over, and I'm not going to talk to this idiot. So I think when people hear it, they probably like, yeah, I'm sure it's positive, because again, with the woke, they never really understand the actual definition of the words they use, like racism, systemic. They just say things. They don't know the real woke.
Right.
When woke started, again, I have to take responsibility for this as one of the black members of the United States of America. One brother said to one very liberal white guy one day, stay woke. And it has literally just...
and I will say this, a good friend of mine opened it.
Our bad.
All right, so I accept your apology.
Yes.
John Dunlap, started, like a few years ago, started a gym, a good friend of ours, woke, the name is woke. You can keep it. Everybody else, I think we should stop using it.
Yeah.
Hey, guys, thanks so much for being here.
Thank you.
I can't wait to see you on stage.
So yeah, that's the Fox News program from over the weekend that I found that very amusing, that they just couldn't deal with the fact that people still thought woke was a compliment, despite all the Fox News time spent on making it try to sound like some terror. And they never really define what woke means, like I said. And so kudos over on CNN State of the Union. The guest host this week was Kaitlan Collins, and she had this guy, Vivek Ramaswamy, on, who, in my mind, having, I live here in California, I've had some interaction with Silicon Valley folks over the years, and they're definitely, or in general, not woke people. They're more libertarian. They're more like, there's this whole like tech bro culture that has some misogyny in it, and there's all sorts of things that are very unwoke about Silicon Valley tech culture. And I think Vivek Ramaswamy is actually more typical of the kind of person you meet in Silicon Valley. He wrote this book, like anti-woke book, and you'll see Kaitlan Collins even says he's the king of anti-woke or whatever, and when he defines woke, actually, it doesn't sound too bad. And then he strawmans it. And then he talks about why Silicon Valley Bank failed. And even he admits it's not because it was too woke. And anyway, I'll talk about all of that after we watch that clip together over here.
Well, on that front, one of the things, you've been dubbed the CEO of anti-woke. You have written several of these books. You've been very vocal of your criticism of what you say is wokeism, woke religion. Can you just define how do you define woke?
Yeah, and I'm going to define it in neutral terms, not in critical terms. Being woke refers to becoming alert to invisible societal injustices, generally based on genetically inherited characteristics like race, sex, and sexual orientation, and then being called upon to act on those injustices using whatever potential legally means are necessary, including the market, to do it. That's a neutral definition that even most proponents of wokeism in the United States would agree with. Now, my criticism of this is I think that it's inherently divisive to tell us that we're nothing more than the characteristics we inherit on the day we're born. That divides us on the basis of race and sex and sexual orientation. And then when that merges with capitalism, which is what I've actually been the biggest critic of, what it does is we lose the sanctuary, the apolitical sanctuary in our economy that otherwise brings us together, whether we're black or white, even whether we're Democrat or Republican. That's one of the underappreciated reasons why capitalism has to stay apolitical. And I'm proud to say I've been the leader on leading that fight over the course of the last couple of years, and with some progress, because I think we're turning the tide where companies are realizing that they're not doing good for themselves or even doing good for society by engaging in these fraught political and social questions. Yeah. And I think we're beginning to see that change of the tide.
We should obviously note there are proponents of ESG who disagree with that, but if you were president today, how would you handle the collapse of SVB? How would you direct your Treasury to handle that? Would you bail them out? What would that look like under a President Ramaswamy?
So I would not bail out either SVB or even the depositors, because here's what's actually going on. Silicon Valley Bank made some uniquely bad management decisions. One of them is, first of all, they have a depositor base that's really concentrated of tech startups in Silicon Valley. A staggering nearly 90% of their deposits are uninsured. That's an anomaly compared to most banks in this country. So what's happening right now is a lot of Silicon Valley executives and VCs this weekend, many of them have even reached out to me, to push this narrative that that's going to create a bank run in America if Silicon Valley Bank isn't actually bailed out. But what they're doing is actually trying to create the fear of one. I think that could actually become a self-fulfilling prophecy, which is dangerous. But the reality is Silicon Valley Bank also had exposure to interest rate tethered securities that they could have hedged. A normal bank would have done that. Silicon Valley Bank did not. So I do not think we should reward that kind of bad behavior, that kind of bad mismanagement. And even on behalf of many startup companies who put their money in a concentrated way into that one bank, I don't think we should be rewarding that with a bailout. And I'm consistent. I was also against the student loan bailouts, that President Biden's proposed. But I think you can't talk out of both sides of your mouth saying that Silicon Valley Bank deserves to be bailed out while people who hold student loans shouldn't. I think that actually we should let the market work here, let Silicon Valley Bank fail if needed. But if the government needs to do one thing, here's what I will say. It's get out of the way if another bank actually wants to acquire Silicon Valley Bank. There's a lot of credible rumors this weekend that actually the FDIC or other parts of the government are going to obstruct an acquisition because they don't want more concentration risks in other banks. No, I think the government needs to get out of the way. And if another bank actually wants to buy and save Silicon Valley Bank through the private sector itself, they should be permitted to do that.
We'll see if they do that. But one thing you seem to be implying is that in part because of SVB's diversity initiatives that they have on their website, that was part of the downfall here. But you just said there, it was about the interest rates and what happened there with the bonds, right? Not about the diversity initiative.
Yeah, I haven't implied. I'll tell you, we're talking right now. I'll tell you exactly what my views are. I think this is an issue with respect to the securities they held, the concentration risk of their customer base, and their failure to hedge those risks. However, here's a couple observations I'll make. Silicon Valley Bank just last year made a $5 billion commitment to sustainable finance to ensure a better and more sustainable planet. If they had actually solved for a more sustainable balance sheet, they would have better done their job. But it's even deeper than that. I think that if they do get bailed out, part of their bet is that they wanted to signal that they're one of the good guys by influence amongst influential people in Silicon Valley, even in Washington, D.C., by gesturing towards even committing $5 billion, which I don't think is responsible, towards something outside of what their core mission should have been focused on. And you know what? The sad part of the story is if they do get bailed out, it'll be because they bought that kind of social insurance. And I've written about this in Woke Inc. It's not that different than what companies like Goldman Sachs did back in the 2008 financial crisis. You play the right games, you influence the right people, you send the right virtue signals, you're the one that gets bailed out if you're Goldman instead of Lehman Brothers, who didn't do those things. This is crony capitalism. We saw the movie in 2008. I had a front row seat to it. I was working in finance in New York City back then. It was my first job out of college. It would be a sad thing to see that story repeat itself. And this isn't a left-wing or a right-wing issue. It's an issue about the integrity of capitalism itself.
Well, we'll see what happens if they do get acquired or if they do get a bailout. Vivek Ramaswamy, 2024 presidential Republican candidate, thank you so much for joining us.
So there you see Republican candidate Vivek Ramaswamy specifically saying that it wasn't woke capitalism that was responsible for the failure of this bank, even though he wrote a book about woke capitalism and he is from Silicon Valley. So I don't know. I think that's pretty persuasive. He gave the real reasons for the failure having to do with the low interest government bonds that became less valuable when interest rates went up, and the high number of tech depositors at Silicon Valley Bank with accounts with balances way over the FDIC insured amount of $250,000. I saw in the live comments along the way that Zed Alpha asked, where did SVB bailout money come from? Was it from the FDIC fund? Well, there is enough money in the FDIC fund to bail out all the investors, including those over 250,000, for the entire FDIC fund. It comes close to wiping out the fund, and then apparently Congress is going to set up this, or they're going to set up this $250 billion stability fund that the FDIC can use if it runs out of money. That's like the next step. Now that extra money could be taxpayer money. So that Biden promised this morning in his speech at 9 a.m. Eastern time before the markets opened that no taxpayer money would be used. So I guess we'll see if the FDIC fund can make all of the depositors whole. But I mean, that actually makes sense to me. If you deposit money in a bank, even if you're depositing more than $250,000, you aren't really investing in risk. Not like the shareholders of the bank who are not going. There's no bailout. That was the thing that I wanted to disagree with Zed Alpha there. Zed Alpha said, where is the bailout money coming from? It's not really a bailout. The bailout would be what we did back in the 2008 crisis, where we actually bailed out the shareholders, like the people who own some of these companies, the people who own Silicon Valley Bank, the shareholders. They're not going to get all their money back, and the management is actually going to be fired. That's one of the things Biden said this morning. So that's a little bit different from the lack of accountability back in the 2008 financial crisis. But the other thing that Vivek Ramaswamy said there is that he finally gave a definition of woke there. It was what you're alert to the invisible societal injustices that generally come from, genetic or immutable characteristics. And, everyone would agree with that, even, the proponents. But then when he criticizes it, he strawmans it. He changes the definition to mean that people are defined by their genetic immutable characteristics, and that's too divisive, and that capitalism used to be a place where all people could come together despite their backgrounds, which I don't know, that doesn't really meet the version of U.S. history I'm familiar with. And also what did they come together for? For the belief that the promotion of profit is the most important thing. It's I don't know, for Star Trek fans, it's like the Ferengi ethos, and that's not necessarily, I mean, that's the whole ESG movement, environmental, social, governance, restrictions put on investing. That's people who decide that they don't want to be morally culpable for investing in corporations that are destroying the climate or treating workers poorly or doing all sorts of nasty things politically. And so they ask their investment advisors to put their money places where they're I saw that that's so criticized on Fox News. I wonder if instead of ESG, if it was called pro-life investing. What if they called it pro-life investing? All of a sudden, would Fox News then think it was wrong to put moral and ethical considerations above profit if it was a pro-life investment fund, which is basically what it is. It's a fund where you want your investments not to do things that you think are immoral or unethical. And anyway, that's my other criticism of Vivek Ramaswamy's analysis there. And now I'm going to get to the news summaries from longest to shortest. They all cover, to some extent, the Silicon Valley Bank failure, except for Fox News Sunday, as I explained at the beginning. I think ABC, NBC, and CBS, all in their own way, did a good job of covering this. I'll start with the longest one, ABC's This Week with George Stephanopoulos, co-host Martha Raddatz this week, and then they have their business reporter, Rebecca Jarvis, explaining the bank failure that I'll talk about with you a little more after we watch that clip together over here.
Good morning and welcome to This Week. As we come on the air this morning, the federal government is scrambling to contain the fallout over the collapse of Silicon Valley Bank, the largest U.S. bank to fail since the 2008 financial crisis, the second biggest bank to collapse in U.S. history. Silicon Valley Bank primarily catered to startups and technology companies, but its demise began Wednesday after concern over its cash reserves sparked a bank run by its clients. The Federal Deposit Insurance Corporation has taken control of the bank and its billions of dollars in deposits, the vast majority of which is not insured. The Biden administration says the banking system remains resilient, that reforms enacted after the 2008 financial crisis would protect the broader economy. But the situation remains fluid, tense for those with uninsured deposits, and raises concerns about the impact on other banks and the technology industry. We'll try to make sense of it this morning. Our chief business and economics correspondent, Rebecca Jarvis, leads us off. Good morning, Rebecca.
Good morning to you, Martha. And this was the go-to bank for tech companies and startups. On Thursday, when they were spooked, they pulled $42 billion out of their accounts, and now the FDIC is in charge, and billions of dollars in customer funds hang in the balance. Across the country, anxious customers still unable to access their money in Silicon Bank.
All our money is in the bank.
In just 48 hours, the bank collapsing, regulators seizing its assets and shutting its 17 branches in California and Massachusetts. It was the second biggest bank failure in U.S. history. This morning, federal regulators are working to make sure customers can withdraw at least some of their cash when the bank reopens Monday.
It's insured by the government, so I'm pretty sure we'll get our money.
Silicon Valley Bank, the 16th largest in the U.S., was a go-to lender for tech industry and startups, companies like Roku, Pinterest, ZipRecruiter, and others. Rising interest rates put pressure on SVB to raise capital to shore up its finances. That spooked account holders who rushed to withdraw their funds and sparked a run on the bank, and the government stepping in.
We're expecting some difficulty and hoping that we can get at least an idea of Are we losing money? How much money have we lost?
A lot of us are going to be in a very painful situation very quickly.
At the end of last year, SVB held $175 billion in customer deposits. The government insures each account up to $250,000, but many customers had much more than that in their accounts. Those customers will have to wait in line to get some, if any, of their additional money back. With their accounts frozen, companies fear they won't be able to pay their employees.
A little nerve-wracking when it comes down to how you keep operating your company.
The White House rushing to calm financial markets.
The reforms of the global financial crisis of 2007, 2008, we've put in place stress tests and other tools that our regulators have to provide more resilience to our banking system.
One expert says banks remain healthy overall.
Fundamentally, the system is in very good shape. It can take a lot of pressure.
But the full fallout isn't clear. Several regional banks tumbled Friday. Thousands of wineries who relied on SVB are reportedly locked out of their accounts, and sections of the housing market could even be at risk. But larger banks like JP Morgan Chase and Bank of America are regulated differently and held to a higher standard.
Most Americans won't even feel a ripple. It's not something that people, I think, should be concerned about.
And yet many questions still remain this morning. First and foremost, whether the government or another bank might step in, that spillover effect, and finally, what the Fed's next move will be. We remember that strong jobs on Friday and near historic inflation persists. The Fed was largely expected to hike interest rates again in 2 weeks, but that would make credit card borrowing more expensive, and it would increase the probability of more debacles like the one we just saw. Martha?
Rebecca Jarvis, thank you. And joining us now is Senator Mark Warner.
And I will have a clip of Senator Mark Warner coming up. If you look down at the clip list in the video description, it's actually clip 12. I think that's the best cross-examination of the week, is Martha Raddatz first questioning Senator Mark Warner, who's on the banking committee, about the Silicon Valley Bank failure and also about his vote during the Trump administration. He was one of 17 Democrats to join Republicans to loosen regulations on banks like Silicon Valley Bank, and he defends his vote. But I think that I saw some people in the comment section also talking about how that deregulation that was the CEO of Silicon Valley Bank went and lobbied for and now is failing partly because of that looser regulation. And yeah, I'll talk about that when I get to clip 12, the final clip, but I still have 4 more news summaries to show you. I think ABC and probably had the best coverage of the Silicon Valley Bank failure with the most facts. Next might be CBS News' Face the Nation, which is like almost 2 minutes shorter, so it doesn't have quite as much detail, but it also covers the topic really well with Margaret Brennan and then Mark Strassmann. I remember Mark Strassmann from the pandemic was always coming to us from Atlanta. I think he might still be in Atlanta. I can't remember for sure, but that'll be the clip after next. But then NBC News Meet the Press here in the middle also did a fairly good job of covering the Silicon Valley Bank failure, but they get the award this week for like fitting the most topics into the news summary, because you see they talk about like the China threat and like China brokering a deal with Iran and Saudi Arabia, border security problems with those 4 Americans killed by a Mexican cartel, and Tucker Carlson putting together the false video of January 6th to make it look as if it wasn't as violent as it was, Republican presidential candidates in Iowa, possible Trump indictment this week coming up from the Manhattan DA on the whole Stormy Daniels hush money payments, and then they get to the Silicon Valley Bank failure. So I guess kudos to NBC News' Meet the Press for fitting so many topics in. Not the longest news summary. It's only about 3 minutes that I'll talk about with you a little more after we watch it together over here.
And a good Sunday morning. It was a week, to borrow a phrase, of everything, everywhere, all at once. Global instability and threats to democracy at home. And it ended in the second largest bank collapse in U.S. history. All of it adds to the uncertainty many Americans have been feeling for a few years now. Around the world, Iran and Saudi Arabia agreed to restore ties in the Middle East in a deal brokered not by the United States, but by China. And it happened just as our nation's top intelligence leaders testified that China is, quote, the most consequential threat to U.S. national security. On our southern border, the kidnapping of 4 U.S. citizens in Mexico and murder of 2 of them just over our border raised tensions on the charged issue of border security, prompting calls for President Biden to try to crack down on cartels. And there are real questions about whether the Mexican government can be a partner in this. Then there's the threat to democracy here at home. The Republican divide on the Capitol attack broke open again this week after Fox host Tucker Carlson presented an alternative reality of the insurrection, falsely describing it as mostly peaceful chaos. And he ended up showing footage that was provided exclusively to him by the Speaker of the House, Kevin McCarthy. Republican senators called the broadcast normalizing the attack a mistake, dangerous and disgusting. One even used an expletive. But many House Republicans, they defended the broadcast. But the biggest political story of the year kicked off in Iowa as the co-frontrunners for the Republican nomination took their campaign there for the first time. Florida Governor Ron DeSantis testing his retail campaigning ability on Friday, and Donald Trump holds an event in Davenport, Iowa tomorrow. And guess what? Later in the week, the Manhattan District Attorney's Office has held open a day for Donald Trump to be in front of the grand jury there, where criminal charges for Trump's role in the payment of hush money to porn star Stormy Daniels could be coming any day now. And how will voters and Mr. Trump's opponents respond to a new label, indicted former president, if indeed the Manhattan DA does move forward with those charges? But we're going to turn our attention to the bank failure. Silicon Valley Bank became the second largest bank in U.S. history and the first since the financial crisis in 2008 to fail. The bank is small by comparison to the nation's largest banks. It held just $209 billion in assets compared to more than $3 trillion at J.P. Morgan Chase. But its implosion did set off a wave of concern, not just about the banking sector, but about how venture capital firms behave in Silicon Valley, and that sent some stocks tumbling. The Biden administration tried to remain calm about all of this on Friday.
When banks experience financial losses, it is and should be a matter of concern.
With the reforms of the global financial crisis of 2007, 2008, we've put in place stress tests and other tools that our regulators have to provide more resilience to our banking system.
Well, joining me now is Sheila Bair, the former chair of the FDIC, which had to take control of Silicon Valley Bank on Friday, and Steve Leisman is CNBC's senior economics reporter. Welcome to both of you.
And we'll have a clip of both Sheila Bair and Steve Leisman. If you look down in the video description, under the clip summaries there, you can see that's clip number 11. I don't know. Should NBC News Meet the Press have spent more time on Silicon Valley Bank and less time on those other news stories? Or actually, is it the reverse, that like those other news stories are going to grow and grow, and this Silicon Valley Bank story is going to fade off into obscurity? It actually might be more the latter. So I don't know, maybe NBC News had it right there. But CBS News Face the Nation spent more time on the Silicon Valley Bank story than NBC did, less than ABC. I think they did a fairly good job. Margaret Brennan, Mark Strassmann. I'll talk about that a little more after we watch that news summary together over here.
Good morning and welcome to Face the Nation. Government regulators have been working through the weekend to contain the spillover from the collapse of Silicon Valley Bank. But reverberations have already been felt overseas, from Europe to Israel. Back home, the concern is especially acute in America's technology sector. President Biden spoke last night about the government's response to SVB's failure with California's Governor Gavin Newsom, who has emphasized the need to protect America's innovation ecosystem. The turbulence comes at a complicated moment for the U.S. economy. CBS News senior national correspondent Mark Strassmann is in Atlanta with more.
Help wanted. Nearly 11 million open jobs in a labor market that's still sizzling. More than 300,000 hires last month, more than 800,000 already this year. One big winner, the leisure and hospitality sector, 2/3 of its employees, women. For the last 4 months, women have outgained men for new jobs.
I think all this matters. It's no accident.
It means our economic plan is working.
But economists also need help. They're trying to solve this muddle of a post-pandemic economy. Inflation stubbornly above 6%, despite the fastest rise in interest rates in 4 decades. More signs of these inflationary times: rises in total mortgages and total household debt. The Fed has a lot to think about.
I think inflation definitely hits different areas of the economy in different ways.
Just like the impact of interest rate hikes. California's Silicon Valley Bank, poorly hedged, has collapsed. Depositors panicked in the biggest bank fail since the 2008 financial crisis. Rising interest rates hobbled the bank's loans and investments. The FDIC has taken control, but a worried Wall Street ended down on Friday.
The market may be fearing a more contagion risk of financial instability.
The law of unintended consequences. One more consideration for the Fed, mulling over interest rates as a whip to tame inflation's lion.
If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
Looking for more clarity? Patience, at least for another couple weeks. The latest numbers from the Consumer Price Index come out on Tuesday, and the Fed will meet again next week to consider raising interest rates yet again. Margaret?
Mark Strassmann is in Atlanta. I think he's based in Atlanta, but there was this whole thing during the pandemic where, like, he said every week he would go and knock on the door of the CDC, which is, which is based in Atlanta, and he never got an answer, and he kept trying to interview them, and I got the feeling that's why he was in Atlanta. But now I think he just is based in Atlanta, and otherwise, why would he be covering Silicon Valley Bank from Atlanta? That doesn't even make sense. But it was a pretty good look at the economy there. Some good details. The next news summary, also journalistic, because I'm finishing up the 4 journalistic news summaries before I get to Fox News Sunday. The non-journalistic organization that I always throw in as one of the big 5 corporate outlets. CNN State of the Union with Kaitlan Collins as the guest host. They did cover the Silicon Valley Bank. This is only 90 seconds. And then they spent like half the time talking about how Mike Pence finally came out with a stronger statement against Donald Trump. But he chose to do it at like this elite gathering of journalists and politicians, the Gridiron Dinner, which is kind of like the White House Correspondents' Dinner, where people get up and make jokes about politics, except unlike the White House Correspondents' Dinner, it's like no cameras, no recording devices allowed. So I guess he was afraid to take on Donald Trump anywhere where there might be video. That's pretty cowardly if you ask me, but that's like half the news summary from CNN State of the Union, which I will talk about a little more after we watch it together over here.
Hello, I'm Caitlin Collins in Washington, where the State of our Union is watching the 2024 race heat up. Big news in the GOP presidential primary last night as former Vice President Mike Pence went further than he ever has before behind closed doors at the Gridiron Dinner here in Washington, describing his harrowing experience at the Capitol on January 6th and delivering a blistering new line of attack against his former boss and, frankly, many in his own party, saying about that day, quote, "Tourists don't injure 140 police officers by sightseeing. Make no mistake about it, what happened that day was a disgrace, and it mocks decency to portray it in any other way. I know that history will hold Donald Trump accountable." But first, this morning we start from political turmoil to the financial turmoil, and a pivotal moment for the American financial system in just 24 hours. Markets are going to reopen, and rattled investors are starting to assess the fallout of the second largest bank collapse in U.S. history. Silicon Valley Bank is now under control of the FDIC after panic among its customers set off a bank run last week. The White House said on Saturday that President Biden spoke with California Governor Gavin Newsom about the efforts to address the situation and presumably to contain the fallout. It's a new crisis on the president's desk after a week focused on his plans for the American economy. So no one better to join us than the White House Director of the Office of Management and Budget, Shalonda Young. Good morning. And
I don't have a clip of Shalonda Young there, although I showed you the clip already of Caitlin Collins cross-examining or questioning Republican presidential candidate Vivek Ramaswamy about what woke means and all that. And I cut out a whole part where he was criticizing the ESG movement, to make where people want their investments to be more environmentally and socially acceptable through the governance. That's what the G is, governance of corporations. And anyway, but that news summary, I don't know why they focus so much on Mike Pence, and the whole thing about Mike Pence saying that Donald Trump will be held accountable by history for what he did on January 6th. Well, good for history, but it might be easier for Donald Trump to be held accountable if you didn't fight the subpoena from the special prosecutor, Jack Smith, who's looking into January 6th. He's fighting the subpoena to go and testify about what Donald Trump did on January 6th, and then choosing an off-camera, no recording devices event to say Trump will be held accountable, but don't make me do anything. I don't know. I don't have a lot of respect for Mike Pence, other than he didn't actually acquiesce to what Donald Trump wanted him to do on January 6th. I guess, his one big moment was deciding not to break the law and violate the Constitution, but pretty low bar, and he hasn't really been going above that low bar much since then, and I don't think what he did at the Gridiron dinner that was reported there gets him much further, but you can let me know what you think in the comments section. The final news summary here is briefly at the beginning of Fox News Sunday. Like I said, Fox News Sunday never mentioned the Silicon Valley Bank failure anywhere in the program, which was kind of weird given that this morning, as I already showed you, it was like a huge crisis that's on Fox News all day. I'm surprised they don't have a graphic that says like Biden's bank crisis yet, because they're definitely blaming Joe Biden and of course woke capitalism, whatever that is. And but Fox News Sunday, they never mentioned it. Their big story was Biden's budget is Biden's big spending budget, huge spending. Well, it's only 30 seconds long. I've spent more time introducing it than it actually takes to watch it. So let's watch it and then we'll move on after that over here.
Hello from Fox News in Washington. President Biden is out with a huge spending plan, saying he'll tax the rich to pay for it. Republicans say tax hikes are out of the question, but they haven't released their own plans just yet. This year's budget fight carries high stakes because right now Washington is also borrowing limit or risk huge economic consequences. Joining us now to discuss it all, Louisiana Senator John Kennedy, member of the Senate Budget Committee, who is known for his colorful commentary on this issue and many others. Senator, welcome back to Fox News Sunday.
And actually, the next clip I'm going to show you is part of the interview with Senator John Kennedy. Again, they had a senator on, did not ask the senator about the Silicon Valley Bank failure, about the Republican deregulation that all the Republicans and 17 Democrats like Mark Warner, who at least, I'm going to show you Martha Raddatz cross-examining a Democratic senator about voting to deregulate banks like Silicon Valley Bank. None of that came up on Fox News Sunday. Like I said, my theory is they hadn't come up with their what their spin was going to be. And it turned out it was, it's the failure of the woke bank. It's a woke bank. That's why it failed. And that's ridiculous, as I already showed earlier in the live stream with the first several clips. But the next part I found, I just, since they never talked about my topic, I decided to show Shannon Bream's poor cross-examination of Senator John Kennedy on Social Security. This is almost the two of them commiserating that, mean Joe Biden is, he's being mean to Republicans by not letting them talk about Social Security without making them, say that they're going to, saying, well, Joe Biden in the State of the Union, if you remember, called out Republicans like Senator Rick Scott of Florida, who had a plan to sunset Social Security and Medicare. So it had to be reauthorized by Congress every 5 years. And other Republicans like Senator Mike Lee of Utah had actually said that he wanted to end Social Security and Medicare. So there's ample evidence that the Republican Party they just don't like entitlements. They don't, they want small government. They think it's socialism for people to get benefits in their old age so that they don't end up poor and without health care. And anyway, you can see here Shannon Bream and John Kennedy, the senator from Louisiana, commiserating about how mean Democrats are for pointing out that Republicans are trying to cut entitlements. We can't even talk about it. And a total alternate reality version of what happened at the State of the Union that I'll talk about a little more after we watch that propaganda interview from Fox News Sunday yesterday together over here.
Meantime, entitlements are getting a lot of attention. Republicans have repeatedly said they're not going to cut them. The White House has repeatedly said you need to be afraid if you're getting these benefits. Here is what GOP presidential candidate Nikki Haley said this week.
We have to be realistic. It is unrealistic to say you're not going to touch entitlements.
Okay. They say Democrats are actually making proposals about these entitlements, but they say this: if Republicans continue to stubbornly insist that Social Security and Medicare shouldn't be touched, the inevitable result will be not only that Democrats win the political debate, but that all such reforms will mostly mean higher taxes. So listen, trustees of these programs tell us 10 to 15 years, they'll be insolvent. Nikki Haley's out there saying you got to talk about it, but Republicans are, chastised every time you do. Should you be having a public conversation about those things?
Well, I think you ought to get the Social Security that you paid for, and I think you ought to get the Medicare that you paid for. Now, Medicare is going to start getting in trouble financially in 2028. Social Security in 2035, I think. We should be talking now how to make sure that those programs are solvent. The problem is that President Biden, in his State of the Union address, decided to demagogue the issue. We all saw it. He basically said, if you speaking to Republicans, if you talk about Social Security or Medicare, I'm going to call you a mean, bad person. And that just took the issue off the table when the president decided to demagogue it. It was, you can only be young once, but you can always be immature. And I thought it was a very immature thing to do.
So you think there need to be conversations then about something, whether it's changing the age for people who are not yet paying into these benefits, future changes, current changes?
Well, of course we ought to talk about it. I mean, the life expectancy of the average American right now is about 77 years old. For people who are in their 20s, their life expectancy will probably be 85 to 90. Does it really make sense to allow someone who's in their 20s today to retire at 62? Those are the kind of things that we should talk about. There are changes in Medicare we should talk about. Let me say it again. Medicare pays much more for the same surgical procedure in a hospital as it does in a private outpatient clinic. Why? There are a lot of things we could talk about, but President Biden has taken that issue totally off the table. He says he has fixed it in his budget. And that's nonsense. That's nonsense on a stick.
It looks like that's going to be done through increased taxes, which I know Republicans are thumbs down on that. I want to ask you about the border quickly.
But it still leaves a shortfall. It still leaves $11 trillion shortfall. So when the president says I fixed the problem, with all due respect, he's not telling the truth.
Yeah, there is definitely a debt component to what he's proposing out there. That's pretty hefty. I want to ask you about the border because...
So, yeah, that was not much in terms of cross-examination from Shannon Bream. Like I said, it was pretty much a softball interview. And the Biden budget actually does raise taxes on the rich to shore up both Social Security and Medicare it depends on how long you want to shore them up for as to how much deficit there's still there. But he does increase the solvency of both Medicare and Social Security by getting rid of the cap. There's a cap on taxes for you only get taxed on your income up to, what is it, like 150, 108, it's somewhere between 150 and 200,000. I can't remember the exact number, but any amount you make over that doesn't get taxed for Social Security and Medicare. And so there's a lot of like rich people money left to be taxed for the program. And, some people get more out of the program than they pay in. Some people get less out of the program than they pay in. It depends on a lot of things, but Republicans have been really disingenuous on this issue, and that whole thing about Biden being immature by pointing out Republicans' actual policies that makes them mean people, mean, bad people, that I thought that was, since I couldn't find a clip from Fox News Sunday on my topic, that was kind of the most ridiculous clip from that softball interview, so that's why I shared it with you. The last three clips are all on the main topic of the Silicon Valley Bank failure. The first one is Treasury Secretary Janet Yellen was on CBS News' Face the Nation, and she's like, I guess this is like getting it from the horse's mouth. It's almost as good as the brief statement that Biden made this morning, basically saying that the shareholders would not be bailed out. The management of the bank would be fired, but depositors, whatever the amount of deposits they had in the bank, would be made whole, not just at the $250,000 limit. Janet Yellen is also talking about that here with Margaret Brennan on CBS News' Face the Nation, and I'll talk about that with you a little more after we watch that clip together over here.
I want to get straight to it because the markets will soon reopen for trading. Does the government need to intervene and take emergency measures because of SVB's failure?
Well, let me say America's economy relies on a safe and sound banking system that can provide for the credit needs of our households and businesses. So whenever a bank, especially one like Silicon Valley Bank with billions of dollars in deposits, fails, it's clearly a concern. From the standpoint of depositors, many of which may be small businesses, they rely on access to their funds to be able to pay the bills that they have, and they employ tens of thousands of people across the country. We've been hearing from those depositors and other concerned people this weekend. So let me say that I've been working all weekend with our banking regulators to design appropriate policies to address this situation. I can't really provide further details at this time, but what I do want to do is emphasize that the American banking system is really safe and well capitalized. It's resilient.
Can you say whether these problems were unique to Silicon Valley Bank, or can you say whether there will be other regional bank failures?
Well, look, let me just say that we want to make sure that the troubles that exist at one bank don't create contagion to others that are sound, and a goal always of supervision and regulation is to make sure that contagion can't occur.
Your counterpart in the United Kingdom has said that the government there has ruled out a bailout of the UK arm of Silicon Valley Bank. Have you also ruled out that kind of government intervention?
Well, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
Do you expect a deal or something to happen that can reassure the markets before Asia opens tonight and U.S. markets open tomorrow?
We certainly are working to address this situation in a timely way.
Now, I know you know this region of the country so well because you served at the San Francisco Fed years ago. The tech sector has already been suffering from layoffs. It's already under pressure, and this is really the hub of American innovation. How severe will the consequences be for that innovation?
I think it depends on how this situation is resolved, but well aware that many startup firms have deposits and venture capital firms have deposits at this bank that have been affected by its failure. So this is something we're working to try to resolve.
You know, when you look big picture at this bank had massive exposure to this one particular industry. How did government regulators miss that risk?
I would say that although the tech sector has been suffering from a downturn and has had some significant layoffs, the problems of this bank from reporting about its situation suggest that because we're in a higher interest rate environment, assets that it holds, many of which are Treasury assets or mortgage-backed securities that are guaranteed by the government, lose market value. Mm-hmm. And the problems of the tech sector aren't at the heart of the problems of this bank.
So, yeah, I mean, you saw some of the basic things that Biden said this morning there, that the owners, the shareholders of the bank, not going to be bailed out. They invested in a bank and took the risk. Depositors, they don't necessarily take the same risks. I mean, depositors know that deposits over $250,000 aren't FDIC insured, but some of these Silicon Valley startups had, billions of dollars in that bank. And if you have $1 billion and you have to, how do you get that FDIC insured? Because 250,000, that's $250,000, right? And there are 100 million, or 1,000 millions in a billion. So if you have $1 billion, that means you need to split it up into 4,000 banks if you want FDIC insurance. I don't know if is the $250,000 limit antiquated, or I mean, there are large corporations that need to put large amounts of money somewhere that can be safe. Is there some safer way to keep that money? I don't know. But apparently, most people in their bank, I guess the average depositor in a bank account in the United States has $40,000 in the bank. So your average depositor is not looking for anything over $250,000 FDIC insurance. But I mean, there are a lot of corporations that have a lot of cash, especially in places like Silicon Valley. And I don't know, I'm not sure I even have an opinion on whether the depositors should have been fully made whole. I mean, I don't think the shareholders and the owners and the managers who are responsible for the failure should have their bad choices protected and saved by the government. But the depositors, that's kind of a closer question. You can let me know what you think in the comment section. One of the things that comes up in this next clip, this is Steve Leisman and then Sheila Bair, a couple of experts who are on NBC News' Meet the Press. First, Steve Leisman's asked if it's an isolated incident, and then Sheila Bair's asked about the FDIC insurance. And I guess the FDIC on its own, without further authorization, can increase the amount of money that they cover over $250,000 if there's a danger of, the contagion of the spreading of bank failures. If that's a danger, then the law authorizes the FDIC to increase the cap. And I guess that's what happened. And so that's an important fact that came out from NBC News' Meet the Press in this next clip, which I will talk about with you a little more after we watch it together over here.
The fact that it was a bank run, Steve, and in fact, it was venture capitalist Peter Thiel's name, who became sort of famous in political circles for getting heavily involved in the 2022 elections. It seemed like he pulled his money out and said, hey guys, something doesn't look good here, and it started a run. Does that tell you that maybe this is something that can be isolated, or could this happen at other banks?
Chuck, you're asking the question that Wall Street has, I think, 24/7 been debating since this happened. Let's put the context here. This is probably the first bank run in the digital age. I don't know if Sheila would confirm that. So that means a tweet can cause a bank run. I don't know that we've had a tweet cause a bank run before, but it's worth remarking that comments by people like Peter Thiel and others caused a massive withdrawal of deposits. So there's 4 things that are thought to make this bank unique. It had a particular risk on its in its balance sheet when it came to interest rates. It did not seem to move to hedge that risk. Second, it was highly concentrated in the industry, so that all of its most of its depositors and borrowers, by the way, were from the same place. Third, it had a lot of losses on its books, which, by the way, a bunch of banks do, but they're unrealized. And the fourth thing was these uninsured deposits. 87%, we're told, of its deposits were uninsured, compared to other banks its size that were around 40%. So it's isolated, Chuck. But the key thing for tomorrow morning is, what do regulators do to give people comfort that indeed it was isolated and will remain isolated?
I want to put up, Sheila, put up here a number of companies that people might be familiar with who had deposits in here, who are all need to make some basic payroll runs here. Does the FDIC, can they sort of help ease the payroll issue on their own, or are they going to need like an act of Congress or something?
Well, no, I think so. They only insure deposits. That's what they do.
Right.
They charge premiums for the insured under $250,000. They don't insure uninsured. If there's a systemic risk exception, which suggests there's something very wrong, then that's an extraordinary procedure. They arguably could. But I think it's, this is a $200 billion bank, a $23 trillion banking industry, $200 billion bank. I think it's going to be hard to say that this is systemic in any way. For the payroll, I think the advanced dividend will help these companies make that. I know some of the names that you put up there, that's not necessarily payroll. I know Circle, those are reserves behind their stable coin. That's not their money.
Right.
They can't use that for payroll. So I think you need to differentiate.
No doubt.
Yeah.
But these were all the companies that
These are companies that had substantial uninsured deposits. That's exactly right.
Steve, you spent.
So there was some interesting information, especially because if you listen to that whole thing, it seems like the justification for going above the $250,000 FDIC insurance limit is pretty weak, at least according to those two Meet the Press guests. I don't know what kind of blowback there might be from that, if Republicans are going to try to say that there shouldn't have been a bailout of depositors who had more than $250,000 in the bank. I mean, that's not the same as an investor, like I said. I think it's kind of a close question. You can let me know in the comment section what you think. But I wanted to get to this final clip. I guess this is the cross-examination of the week. Martha Raddatz starts off fairly softball with Senator Mark Warner, Democrat on the banking committee, asking him, what he thinks about this failure of Silicon Valley Bank and why. And then at the end, she does actually do some cross-examination about him voting for this deregulation of the banks back under the Trump administration, one of 17 Democrats in the Senate to go along so that this could get past the filibuster and make it easier for banks like Silicon Valley Bank to get underwater in terms of the amount of money they had available for their depositors, and just more lax regulation. And Mark Warner defends himself. He's a Democrat, but he's one of those corporate Democrats that I think is too close to the corporate banks, and I don't think it was a good idea to go along with the Trump administration policy of making it easier for banks to take these risky decisions. And Anyway, you can let me know what you think after we watch that final newsmaker clip together for the evening over here.
Senator, we know this is only one bank, but this is the second largest bank failure in U.S. history. And banks collapsing bring back a lot of nightmares for people. How significant do you think this is?
Well, Martha, let's remember how we got here. First of all, Banking 101 is about taking care of interest rate risks. This bank bought long-term treasuries, interest rates went up, and they got caught in a bind. But what was different, and your report made clear, $42 billion came out of this bank on one day on Thursday. And frankly, some actors, I think, were accelerating that run. To put in comparison, Washington Mutual, during the crisis, when it went under, it lost $16 billion over 10 days. So this happened so quickly. Why is it important to most Americans? One is because this bank did fund startup companies all over the country. I know it's called Silicon Valley Bank, but the startups literally are all across the country, and they've got to pay their bills this week. And secondly, if other regional banks, mid-sized banks, if people get nervous, they may start taking their money out of those banks and putting it into the large money center banks. We don't want further consolidation. So I know I've been in conversations with the regulators, the administration, the Fed. The best outcome will be, can they find a buyer for this SVB bank today before the markets open in Asia later in the day? That would be the best, making sure that depositors, remember the shareholders in the bank are going to lose their money. Let's be clear about that. But the depositors can be taken care of, and the best outcome will be an acquisition of SVB.
Okay, if you don't have that acquisition, Rebecca mentioned that the government only insures deposits up to $250,000. Most of SVB's deposits were uninsured. Should a bailout be on the table to make sure customers can get all their money back?
Let's see what happens today first. I would point out during the last financial crisis, we did insure deposits up until about between 2008 and 2012. There's generally been a feeling that, the people responsible, the shareholders of the bank, ought to lose their money. Depositors have been a different circumstance, but there are questions around moral hazard. I've got a lot of faith that the overall system is quite strong. We do want to make sure that the Fed is going to move as aggressively, the FDIC, which has got control, will move aggressively as possible. Let's see what happens later today. I'm optimistic, and I do think the
SVB put a lot of their earnings into longer-term securities, but they're not the only ones with that business model. And Secretary Yellen said there are a few banks that should be a matter of concern. So what happens if those fail?
Well, that is the concern again. Do you end up seeing a lot of small and mid-sized banks, which are the heart of the banking system all across the country, people suddenly saying, well, gosh, I've got more than $250,000 in this bank. I want to take my money out and just put it in a JP Morgan or a Citibank. What we don't want to see is further consolidation. So let's see what the regulators, I know that people are working around the clock on this, and I'm a lot more optimistic. Let me just say this. I'm more optimistic this morning than I was yesterday afternoon at this time. But again, we will see how this plays out during the rest of the day.
Senator, after the financial crisis in 2008, regulations were put into place to make sure banks could weather large losses. Under President Trump, some of those were rolled back. And in 2018, you were one of only 17 Democrats who voted for the bill that rolled back some banking rules, including for institutions the size of Silicon Valley Bank. Silicon Valley Bank was under closer watch, closer scrutiny before that bill was signed into law by President Trump. Do you regret that vote?
Martha, I still think we put in place Dodd-Frank. I was proud to be one of the key authors of that bill. It strengthened the banking system. I do think these mid-sized banks needed some regulatory relief. End of the day, Martha, no matter what the capital had been in this bank, if you don't get Banking 101 straight, if you don't manage your interest rate risks, if you've then got to run at $42 billion in a single day, unprecedented. We'll have time to look back on what the regulators did and didn't do and why the bank management didn't get this right. Banking 101, managing interest rate risks. What we've got to focus on right now is how do we make sure there's not contagion and at the same time, believe that the SVB can be acquired. Remember, this has got a good book of business. This has got startup companies all over the country, and that
So,
is going to be a
Senator,
valuable asset to somebody who's going to.
You don't regret that vote?
Listen, I think that was called the 2155 bill. I think it put in place a appropriate level of regulation on mid-sized banks.
So I don't know, did mid-sized banks need regulatory relief after Dodd-Frank or whatever? I mean, he was so proud of voting for it, but then during the Trump administration, he voted to roll it back for the mid-sized banks. And I don't know, maybe it was just bad decisions by the Silicon Valley Bank CEO and management, putting so much money into low interest treasury bonds, not like you said, managing the risk that interest rates would go up, because interest rates aren't going to be low forever. Like that, you can't like run a bank on the theory that interest rates will be low forever. And that was like the main reason this bank failed. So, I don't really know all the details of what the regulation on mid-sized banks that was rolled back under the Trump administration. I've heard charges back and forth. I haven't really had time to research it, and I'm not really an expert on banking regulation. And it seems like there are a lot of like specific things to this particular bank that made it fail that might not make the regulations the culprit, but I'm not sure. I I wanted to thank Iskovimi Garga, if I'm pronouncing that right, which I'm probably not, for the $5 super chat contribution. I appreciate all the financial support I get from my regular viewers. This is the time of year when I actually start putting together my income for my taxes, and it's like my worst year ever for YouTube revenue. Let's just say I'm not going to, in like 1,000 years of YouTube revenue, I'm not going to need an account that exceeds the $250,000, well, more than 1,000 years or whatever, the $250,000 FDIC limit. So this small business is not in any danger of exceeding that limit anytime in this millennium, is my point. But I do appreciate the support. Actually, my YouTube revenue went up a little bit, maybe because of super chat contributions like that. Down under the video description, there are links to become a monthly patron on Patreon, or to give a one-time contribution through PayPal at the $5 level. I will send you out one of these ACLU constitutions, as well as here's one, a weatherproof vinyl #LiberalViewer sticker. If you give me a $5 contribution either through PayPal or Patreon and a shipping address, I will send those out to you, and you can be one of my supporters for the next 2 years while I continue doing this Monday live stream all the way through the 2024 election cycle. I've committed to that, and I think I may have some time this week. I'm not sure that I might be able to create a shorter edited video of the first few clips, like Fox News says bank failed for being too woke or something like that. I think I might go through and see if there's like enough stuff with the first few clips at the beginning that I can edit down to maybe like a 10 to 12 minute video, or I'll see how it works out. But so look for that. If I have time, I will do that in the next few days, maybe even tomorrow. For my old Dash and Sandy fans, some news coming up this week in my house is where we stripped out the carpets that were destroyed by my pets, Dash and Sandy, Dash the cat, Sandy the dog. And this coming week, we're finally going to get new flooring installed, which means I could actually get a new pet sometime before summer. Maybe in May. I think sometime in mid-May is the optimal period where there might be a new kitten. So if you're waiting for pet videos at the end, I know since Dash died last June, I haven't had any pet videos to end the show. Maybe I'll be able to start doing that again in a couple months. And anyway, until I have time to upload another video during the week, or until next Monday, I will finish up the show here and see all of you around the internet.